Hello everyone. It's Khalid. This is the Daily Pitch International Breaking News section, and today we will be discussing the employment data in the US. If you haven't liked and subscribed to our channel, let's do so and move directly to the economic calendar and see what do we have. When looking at our economic calendar, this week on Friday, we have the employment data in the US. Our focus today will be on the non-farm payroll and unemployment rate for this month. Looking at the non-farm payroll, we can see that the expected number is forecasted to increase from 50K to 67K. Looking at the historical data as well, we are seeing some kind of fluctuation in the non-farm payroll numbers. We must remember that a couple of months ago we had the government shutdown, we didn't have an economic data, and right now the shutdown is over and we are seeing some economic data to be released. The forecast for this month, as I said, is expected to increase from 50K to 67K, while for the unemployment rate, the numbers are expected to stay stable at 4.4%. The December number was at 4.6%, higher than the forecast and even higher than what the Feds have forecasted in the last dot plot. So let's put our scenarios and see how this could affect the dollar index. Speaking about the dollar index, let's give a small summary of what is taking place and what happened since last week. The dollar index has been trending lower. Moving to the 1 hour time frame, we can see that it broke below a very important area, 95. It almost the 96, it almost retested 95.5 and then moved higher. The main reason for this significant drop is one of the headlines that the US president said. Whenever they ask him about the US dollar, he mentioned that it's good. In other words, he doesn't mind seeing a weaker US dollar. Why a weaker US dollar? Of course, supports the US exports, and in other words, this supports the economy. Moving on, during the week, the US president as well gave the nomination for Kevin Walsh. Usually the names was between Kevin Walsh and Kevin Hassett in order to take over the Fed chair after Powell finishes his period. Kevin Hassett was more dovish, while Kevin Walsh is known to be more hawkish or more on fighting inflation side. That's why the market absorbed this news as hawkish to the dollar, and we can see a clear rebound. Currently, we are at the 97.5. So the first scenario regarding the economic data that we have on Friday, what if the employment data and the non-farm payrolls were both better than expected? For example, the non-farm payroll at 70 or above, and preferably in case we see a 3-digit number above the 100, and the unemployment rate below the 4.4%. This will be, I believe, will give a boost for the US dollar, and we will be seeing the following movement breaking here. My next area I will be monitoring, I will be looking at two areas. Number one is the 98.5, 98.6, and the more important zone I will be watching is around the 99, 99.2. So in case we have better than expected economic data, I will be looking for the following price action supporting the current dollar bullish momentum. The next scenario that we will have, what if the numbers were worse than expected? And here we are talking about the unemployment rate at 4.5%, or even similar to here to this number at 4.6%, and the non-farm payroll below the 67K, and even if we have a number below the previous 50K, this will give significant weakness to the US dollar. This will signal to the market that the employment numbers are not good, and the Feds could possibly be lowering interest rates faster than the markets are expecting. On the other hand, whenever we have a better than expected economic data, the employment numbers are good, this could be an indicator to the Feds that since inflation is still above the 2% target, the employment data is good, so the Feds could still hold interest rates higher for longer. So for scenario number 2, if the numbers are lower than expected, let's zoom in a little bit. I believe we could see the following. We could be moving lower, breaking below these candle lows. I will be monitoring again the 96, and in case we broke lower, I believe we could be retesting these candle lows at the 95.5 to the 95.3 level once again. The last scenario for us, and of course the least favorable scenario that we would like to see, if the numbers are similar to forecast or if they are mixed. Similar to forecast, simply the unemployment rate at 4.4%, the non-farm payroll between 65 or 70, this is considered similar to forecast. Or if we have mixed data, which is non-farm payroll better than expected, unemployment rate worse than expected, or the opposite. In this case, we will not have a one-sided data, and the direction of the US dollar, I believe, will be the following. We will see price just in a sideway, no clear direction, waiting for the next fundamental catalyst to move the dollar index either higher or lower. So guys, that's it for our episode for today. Hopefully you enjoyed our analysis, and we will see you soon. Thank you so much.